Clients, this is Wesley, your equities analyst at Genghis Capital. Here are some of observations of market activities last week. First, the market held steady as seen through the indices. The Nairobi All-Share Index gained 53 basis points week on week to close at 163.64 points, while the NSE 20 Share Index shed 10 basis points week on week to close at 1,854.55 points. That said, turnover declined by 41.5% week on week to 2.3 billion. Volume-wise, Safaricom dominated, trading 28 million shares, while the banking stocks clocked 16.8 million shares in the week. In terms of price performance, Umeme was the week's stock performer, rising by 9.5% week on week to close the week at 6 shillings and 90 cents. Kakuzi, on the other hand, was the worst performer of the week, losing 9.1% week on week to close at 385 shillings. Foreign investors accounted for 57.5% of the week's turnover. They accumulated on KCB Group while exiting Safaricom, EABL, BAT, and Equity Group to print a net outflow position of 488.7 million. Notably, the Central Bank of Kenya disclosed that local lenders have an exposure of 695.3 billion in the expiring London Interbank Offered Rate and has issued guidelines on LIBOR transition. As highlighted in our topical note titled, LIBOR is gone, what next? Financial institutions, private businesses, as well as the government need to prepare and put in place alternative reference rates in order to mitigate disruptions. On the fixed income segment, market turnover hit 9.4 billion, down 34.5% week on week, partly due to the holiday at the start of the week. Market participation was driven mainly by infrastructure bonds, as well as the longer end of the yield curve. Two bonds are paying coupon today, that's FXD1 2013-10 and FXD1 208-25, effectively closing Treasury's bond payment register for the year. In the T-bill section, performance improved to 87.39% from 65.65% in the week prior. Total bids received came in at 20.9 billion, with 17.9 billion accepted. The 91-day T-bill garnered a performance rate of 113.32% as investors favored the shorter-term security as the political scene heats up. Yields for the discount securities fell marginally for the 91-day and 184-day T-bill, while the 364-day T-bill rose by 0.073% week on week. On the equities trading idea of the week, we recommend an accumulation on EABL. We believe that the price function has its support level between 140 and 150 shillings. Against our target price of 207.5, the prevailing market price has an upside potential of 40%. For the fixed income segment, we eye IFB1 2021-21, which is a 21-year infrastructure bond. The paper has an attractive coupon rate that is tax-free, coupled with a favorable yield. We see bids at 12.4%. If you do have any questions or seek further clarifications, kindly drop us an email at research@genghis-capital.com. Happy investing.